Rashesh Shah, Chairman and CEO Edelweiss Group, joins us on the show right now to get a quick perspective on how business is shaping up, the broking business that is, as well as what's his outlook on the market. Rashesh, good to have you on the show. That's exactly my first question. I mean, do you see a pickup in the broking business, given where the markets are? The market is clearly cheering some of the broking stocks, which is getting a sense of whether things have changed on the ground as well.
I think on the whole there is a slight improvement, though it is largely because of the FIIs and the foreign inflows. On the India side, we are seeing that a few HNIs have come back in the market, but largely retail investors, and if you look at mutual funds, are still seeing a lot of redemptions. So the last 3 months have been slightly better, but I wouldn't say there is a revival or there is a real big uptick, because unless there is clear optimism on long-term growth and retail investors coming back, I don't think we will see heady days of capital markets. On the whole, I think the other way of putting it is sentiment has improved a little bit, liquidity has improved a little bit, but concerns around earnings, growth and the macroeconomic factors are still there.
Are you seeing a pickup in volumes for the overall business, because if you're looking at this market rally, the assumption is that interest is back in the business?
It is helping a little bit. I think overall volumes have gone up a little bit. Plus, I think a more interesting factor has been a lot of capacity has gone down in the industry. As you know, last 3 years, things have been very bad. So people have been cutting headcount. Quite a few people have also announced closure of their brokerage business. So overall industry capacity has gone down. People have also been able to raise brokerage rates a little bit in the last couple of months. I'm hearing a lot of stories about a few brokerage houses have been able to increase their brokerage rates. So given all of that, I think there is a little bit of uptick. But as I said, the retail volumes are still not there. If you look at overall volume, the breadth in the market, the depth in the market, it's still not as exciting as it should be, but a little bit of improvement, and people are now factoring in an uptrend in the market for the next year, because equity markets have come back fairly strongly, and trying to factor it in terms of revival of the capital markets also.
And is that helping your various businesses? For example, the AMC business, what's the outlook there?
Asset management is starting to do well. I think the retail asset management, the mutual fund business is still, as you know, showing equity outflows. We are very focused on equities. So in our mutual fund business, we have not focused on other asset classes. We are very equities focused. And equities, we are seeing a little bit of inflow, but for the industry as a whole, there has been outflow. Our other part of the asset management, the alternatives part, which is the offshore one, has been doing very well. We have now 3,500 crores of assets. And all these are good fee-paying assets. So overall, we are seeing a lot of interest in asset management from overseas investors, especially in structures which are in the alternative space.
Which quarter of earnings will reflect the uptick in revenues that we'll see in your various businesses?
Actually, if you see our quarterly earnings for the last 8 quarters, if you exclude insurance, because there we are still in investment phase, excluding insurance, we have been able to show an uptick in the last 8 quarters fairly significant. And we are now at a stage where we feel confident that we grow at about 20 to 25% a year on a consistent basis and earn of about 14-15% ex-insurance ROE. So if you are just a capital market player, maybe in an uptick you will grow at about 40-45%. We have given that away, and we have said we'll grow at about 20-25% a year, but in a more stable manner. So I think the last 8 quarters has already shown that in spite of the environment being fairly difficult, and we think it should be possible if we execute well for the next 8 quarters also.
What's your outlook on cyclicals versus defenses? So when will that secular uptrend begin for the cyclical stocks, which are right now seeing a trading bounce, primarily being, having been oversold?
Yeah, I think I agree with you. I think there currently seems to be the bounce out of a lot of under ownership. Everybody has, all these sectors have been very beaten down. But really, structurally, investors coming back into these sectors should be after the investment cycle starts in India. As you know, the capex cycle in India is not back yet. And a lot of these sectors are very much correlated to investment cycle getting restarted in India. So, and we don't see that happening for the next couple of quarters. So I think good investors, from a trading point of view, maybe we are seeing a bounce, but I think a lot of good investors will wait until May, June of 2014, and then decide whether the investment cycle, whether the capex cycle is on a rebound, and then react accordingly.
And Rashesh, finally, before we let you go, what's the outlook on the currency and the rates?
Overall, I think if you see all the actions RBI has taken, including the FCNR window and the swap window that has been opened up, a lot of those actions have actually strengthened the rupee. Current account gap has come down, gold imports are down. So overall, rupee should be stronger, though I think RBI wants to keep it in between 60 and 62 range. So it will fluctuate in that range. That also happens to be the fair market value range for the rupee by quite a few estimates. But I think otherwise the rupee is fairly strong and can also go up to 59.60 if RBI is okay with that. But unlikely that suddenly we'll see a huge pressure on the rupee the way we saw a few months ago. So slightly strong, not very strong, but I think RBI is very keen appears to be very keen to manage it between the 60-62 range.